Hey everyone, and welcome back to Grumpy Monkey Trading. My name is Michael. On the show today, we're doing another BananaRama, so we're taking a look at Cramer's Mad Money Lightning Round stocks. We're adding in some analyst perspective as well as some stock charting perspective to see what we garner from those stocks, whether we learn something interesting about them. I hope you had a great Thanksgiving and holiday. I certainly did. We took off for a brief trip to Vegas with the boys, which was a lot of fun, although both of them are now sick. So this is going to be a short episode so that I can be on potential sick little boy duty. With that being said, let's get the show started. All right, our first stock of the day is Wynn. Cramer says, no, we're not going to go with Wynn. As much as we like Steve Wynn, we are going to split the difference and hedge our bets. We are going to buy MGM, which we quite like. So Cramer has often come out and said MGM that he quite likes them. I actually like them as well. I'm looking for a good entry point into that stock for my own portfolio. For Wynn, though, we do have 2 sells, 11 holds, and 8 buy ratings. So leaning towards the buys, with the most recent being that it's a perform or that it's a buy, with the outpouring being 100. If we look at the stock chart, though, we see a really long-term downtrend. I had to go quite a ways back, years back, in fact, to try and find where a decent support line would be for this stock, because we are in this bearish wedge long-term pattern. I had to go back 4 years to actually develop a good support line, but I found one. So it means that we hit it back in October and we're kind of edging down towards it now. If I look in the long term, I would say that it's not in a breakout yet on the positive side, but we are nearing a point where those 2 lines are converging and there's going to be a breakout, imminently in months' time. If we look at the daily chart, the indecisiveness becomes a little bit clearer. So you can see here, previously in that weekly chart, we were edging towards downwards, and now we're kind of bouncing around in this short-term indecisive trend, really. So on the downside, if we break below this resistance line, it means we're going to push farther into that crux of that wedge. But on the plus side, if we can break through and tackle these support lines, then that means that once it goes through this line, that resistance line, then we're in for a breakout. So that's what you're going to be looking for, a punch through that line with some volume, and that would indicate a buy sign for Wynn. So it's a holding pattern for now. Rite Aid, rad. Cramer says, I think you win either way. You win if the deal goes through, and you win on earnings. From an analyst perspective, we have 5 holds and 6 buy ratings, but more importantly, the recent ones have all been downgrades. So downgrades of the stock in the month of November, with approximately $9 being the buy. If I look at the stock charts, these were all downgrades from previous highs, so the $9 is actually more at the peak of the resistance for this particular long-term trend, which you can see is sort of edgingly positive but cautious. We've had a lot of big swings on the downside, on the upside, so there certainly is potential here for slow movement up. And if you believe what Cramer says, then we're waiting on either that deal or some positive earnings, which can propel us forward. If we look at the daily, then we have reached a point where we are just considering life in the next move, basically, with Rite Aid, where we have this very strong resistance line here that if we're going to break through on the positive side, we need to get through at the $8 level. And then we have some kind of sparse support for a while. So there's a lot of opportunity for drop back. If it can break through that resistance line, though, again, with some volume, which is always the key, hold that resistance line on the way back, then that could be a positive move into that 9 territory. And then wait for that buy or the earnings, which are coming out fairly soon. So again, another holding pattern. At&T. Cramer says, I like At&T. I think it's got good yield, and I like the DirecTV acquisition. I think the stores are a little more overcrowded now because of that. For the analysts, there's a lot of positive feelings about At&T. We have only 1 sell, 6 hold, 17 buy ratings on At&T, with the most recent being a buy at about $39. So with $39 is a nice 20% potential gain. That's where they're saying it could potentially get to. Currently, though, we would need to break through a major support line or resistance line. I always get them mixed up. Resistance lines on top, support lines on the bottom. at about 35. This is the long-term trend, so about 2 years of relatively even growth, but you can see some pretty wild weeks where we have a lot of hammers and a lot of bullish engulfing pattern and bearish engulfing patterns in the candles themselves. That provides a nice little roller coaster ride. It's a fun option play, actually. If you want to play both sides of the options, you can generally make some money there, but it is a bit of a rough ride. Let's take a look at the daily. We see that the stock is hitting some upper resistance levels. So we have 2 upper resistance levels here, indicating that that is an upper boundary. If we can push through those, again, with some volume that's supported, then we would be on our way to the breakout towards the upper boundary, and then further on to the projected boundaries by the analysts of 39. But it does have to make it through there. I don't personally like buying towards the top there, so I'm looking for more of an entry point a little lower, perhaps where the moving averages converge as a form of support, or this lower resistance line. I will say that we're in this symmetrical pattern though, and we're really not going to move too drastically any one direction until that pattern is broken from one end or another. They typically break in the direction of the original trend, which in this case was positive. So you can have some confidence that At&T will be making a positive move in the future. Twitter, TWTR. Cramer doesn't actually have any comments on this stock as it was not covered in Mad Money this week. However, it is a stock that I've often addressed on this show, so you can go back to some of those earlier recaps. It's a stock that I own, so I have a personal interest in it and have been waiting, much like most everyone else, to see some positive results. Certainly, Project Lightning was interesting and moments were interesting, but I don't find they were as captivating as they probably could have been to really draw in new interests. Although I will say that is how I now view most of my NFL highlights, is through the moments and Project Lightning. From an analyst perspective, 24 holds, 18 buys. Most recent is a neutral at about 32. That's kind of how I feel about it personally. If we look at the stock, you can see we're in a long-term symmetrical pattern. These often break, as I mentioned previously, in the direction of the original trend, which is unfortunately down. So it's going to be something to keep an eye on, particularly since we're at this lower support line. That 32 is above the overarching resistance line, and the one that's been maintained since May. So if we could bust through that, that would be a positive trend just in itself. But we are months away from really converging on this pattern in particular, and so it's going to be one to really keep an eye on. We need results is what we need. We need a positive earnings. We need some sort of trigger for people to say, hey, Twitter is viable. And I think then the floodgates are going to open. People are going to pour in investing into this thing. It's happened in the past. I hope to see it again soon. I really do believe in their product. It has a space, a very specific space that it serves, and they just need to figure out how to market it a bit better. So that's it for me this week. We'll do this as my wrap-up video as well. I hope you enjoyed the show. If you did, please subscribe. It means a lot. It also generates a lot of interest in those internal Google algorithms for me to appear in search engines, which is important. I will do a full program next week now that the holiday is over. So I hope you enjoyed the program, and I hope to see you again soon. Bye.